Hello and welcome to this video. I am Subayil and on this channel, my goal is to help you in making your money work harder, smarter, and in long term. The volatility of the cryptocurrency markets can be chaotic, and it requires nerves of steel to not get emotional and remain calm and pragmatic while holding or trading cryptocurrencies. The volatility can be so catastrophic that many people can FOMO in and overinvest and sell when the price drops off the cliff in the blink of an eye. I have lived it, I know it, and therefore in this video I will be reacting to a video of Graham Stephan and give you some insightful information and important tips which might help you in the future. The purpose of this video is to help the experienced as well as new crypto investors and enthusiasts who want to allocate a small portion of their portfolio to cryptocurrencies. In the end, I will also uncover the way I diversify my crypto portfolio. So let's go ahead.
What's up, whales? It's Megalodon here, and I have no idea why you wanted me to say that as an intro, but there you go, and now we're about to take a bit of a twist because I'm selling some Bitcoin. It's been an absolutely crazy ride, hitting a high of almost $64,000 before dropping over 50%, seeing regulatory bans take place around the world, and watching Elon Musk influence the market billions of dollars in either direction. Now I get it, it sounds like I've lost my mind and I'm ignoring all of my own advice when it comes to only investing what you're willing to lose and dollar cost average into the markets over time while you hold on for dear life. But after doing more and more research online, I gotta say it's making some sense to sell. And I think if you just hear me out through the video, by the end of it you might actually agree with what I have to say. I know that's a really tall order, but just give me a chance to explain myself and then after let me know what you think. Although really quick before we go into that, it would mean a lot to me if you sold that like button for the YouTube algorithm by making it turn blue. And best of all, unlike cryptocurrency, like buttons over 10,000 will not be reported to the IRS. So you could smash it as much as you want and all of those like buttons are yours to keep. So thank you guys so much, and also big thank you to Wealthfront for sponsoring this video, but more on that later. Alright, so here's what happened. In the beginning of January, I made it a goal of mine to begin diversifying my portfolio into cryptocurrency. Now prior to then, I made a very conscious effort to pay extremely close attention to how I invest my money. And throughout the last year and a half, I've been shifting a lot of my attention to the stock market so I could build a more robust portfolio that isn't just 100% real estate. But the one asset that I've largely overlooked and never really considered throughout the last decade was cryptocurrency.
So trust me, Graham Stephan is not alone in the boat, and he is also not to blame. Recalling my memories of the last cryptocurrency bubble, John McAfee was the person whom people worshipped and followed as if he was the oldest leading female sheep leading the euphoric crowd. Also, Katy Perry printed her nails with the icons of cryptocurrencies. This time, however, things have gone much further, and instead of John McAfee, who motivated people to invest in Verge, the richest and most influential man on earth, Elon Musk, is shilling dog meme coins. Let's first have a look at the John McAfee case and the last bull run so that we can draw a parallel between the previous bull run and the current cryptocurrency bull run. So this is how it went. John McAfee comment on Verge leads to massive price surge. So right after John McAfee tweeted about Verge, in the blink of an eye, the price of it went to $0.26 or 26 cents at the market peak, all the way from $0.00002 on March the 17th, 2017. Which is 13,500 times higher than its price 9 or 10 months back. This is something which humanity might never witness again. And then the bubble popped, and then its price plummeted again. When the only logic behind investing in a stock or a non-correlated asset like cryptocurrency is the fact that everyone else is doing the same and one can make millions without any sort of due diligence, it is the time to be scared and sell. Many people do exactly the opposite, at least many retail investors. But now, this time, as I mentioned before, it is not John McAfee, but the richest man on earth shilling dog coins. And look at this graph, which looks like the trajectory of a rocket going to the stratosphere and leaving the orbit of pragmatism and rationality in the dust. So, in a bull run, people start to justify even the craziest and most risky investments without doing their due diligence, which leads to obliterating the wealth of millions of people. So, did you see any parallel between the last and the current cryptocurrency bull run? I hope you did. In short, the tool used by both John McAfee and Elon Musk was the same. It was Twitter. And the consequences are quite similar too. The only thing which differs are the characters in the play, meaning John McAfee out and Elon Musk in. Isn't that awesome? Indeed, history repeats itself. And indeed, the reptilian emotional brain of people overpowers their logical brains during a bull run or in a bubble.
Now sure, I dabbled here and there and I bought a little of it 3 years ago just to try it out, but I never really treated it like a serious investment, and for the most part, I dismissed it as something that was too speculative because I never really understood how it worked. But over time, I had a chance to continue learning about it, and I gotta say, the more I immersed myself in the world of cryptocurrency, the more I began to see the potential, and in early January, I was in.
Here I would like to mention two things. First, I would like to tell you about his timing and entry in the market. So my advice to you is that always check Google Trends. And don't invest when many people, normal Joes, are searching for Bitcoin on Google. And also I would like to tell Graham that he should not invest when he is making more crypto videos, and also Andre J and Meet Kevin are also making more videos on cryptocurrencies, since this is one of the main traits of a crypto bubble. So remember that when the non-crypto channels are publishing crypto videos with much higher frequency, this is in fact the time to stay away from buying cryptocurrencies. One should always preempt the market in the time when media is saying horrible things about cryptocurrencies, and many crypto channels are shut down due to less views and ads revenue. Also remember that non-crypto channels, or let's say personal finance and business channels with a wide scope, only publish crypto videos in a bear market when some big news pops up, but in a bull market, the frequency at which they publish crypto videos is much higher. Secondly, Graham mentioned potential, but the word potential can be very misleading sometimes and might overshadow the reality as we see currently in the EV market, where companies that have not even sold a few hundred cars are valued in hundreds of billions. We cannot pay any price for the growth potential of a company. And it is also true for the Tesla stock, which is way too overpriced. Let's see what Elon Musk said about the Tesla share price when it was over 7 times cheaper as compared to its current price. And that is why he is looking for reasons to sell his Tesla stocks, as mentioned by Michael Burry.
I invested 1% of my entire portfolio into a 60-40 split between Bitcoin and Ethereum, and back then Bitcoin was about $30,000 and Ethereum was about $1,150. But I gotta say, once I invested my money, something interesting happened. After I bought in, I reasoned with myself that realistically it's never going to be worth $0, so I could take the risk and increase my allocation to 3% just to give myself a little bit more exposure, and so after that, I just kept buying in a little bit more. I honestly didn't have any method or strategy when doing this, but every week or so, I would transfer money to Coinbase Pro, buy Bitcoin or Ethereum, move that over to BlockFi to get paid some interest, and then I would repeat that process whenever I felt like it. Well, I gotta say, I hit my target 3% allocation a lot faster than I expected through a combination of regular buy-ins, Elon Musk tweeting about it, and the fact that it doubled and tripled in price.
And that is exactly the point. While I still appreciate that it is a reasonable portion of Graham's portfolio, let me explain how the herd mentality plays out and injects FOMO in the minds of people and entices them to buy more cryptocurrencies in the same way as it motivated him. Also, when people don't do their due diligence and follow people with influence blindly, it means we are indeed in a bull run. As I mentioned while sharing my memories from the last bull run, when Bitcoin started to trend higher and higher as per Google Trends, more and more people were buying into the hype as the cocktail party of the bull run continued, which eventually came to a bitter end. When the only logic that goes into the investing decision of majority of people is the blind replication and copying what the others are doing, and most of the people don't put any effort into doing any sort of due diligence, it is the time to be scared and sell. But unfortunately, people do exactly the opposite. At least many retail investors whose emotions act as the fuel to take the prices to stratosphere in a bull run. And that is exactly why Verge went to the stratosphere in the last bull run, and in this current bull run of the cryptocurrency market, Doge and other meme coins are reaching the moon.
Although now, after the peak a few weeks ago, things have started to go downhill. In the last 30 days, Bitcoin has lost about 50% of its value, Ethereum is down about 40% from the peak, and even though right now overall I'm pretty much break even on my total Bitcoin investment, there are portions of my investment which have lost a considerable amount of money. And that is why today it's starting to make some sense to sell.
In my opinion, it was a very smart move to exit the market, at least for now, after having a taste of the bitter volatility in the cryptocurrency market. This surely helped him in avoiding getting burned. But some people are not that pragmatic and fortunate. They will keep on holding the cryptocurrencies until all their money has gone down the drain, since the emotional attachment has taken over their logical and analytical mind, and they are unaware of the winter storm of the bear market after the sunny days of the bull market.
Now I get it, I understand it sounds totally out of character for me to say something like this. I've always been a huge proponent of only investing your money long term, continue dollar cost averaging, and don't sell unless you absolutely need the money. Plus, with all of this talk about Bitcoin potentially one day being worth $500,000, the difference in price between $58,000 and $38,000 is pretty nominal in the big picture. So what's going on? Well, the reason I'm selling is because of a term called tax loss harvesting, which for those not aware, it's a tax reduction strategy which allows you to sell off non-performing assets which have lost money, which then allows you to offset the tax you would otherwise owe on the assets that have made you money. Now, typically, this is most commonly used with people who invest in securities, like index funds and stocks. But with cryptocurrency, it's a totally different animal with a whole bunch of crazy advantages. And don't worry if you're confused, here's how it typically works with stocks. Let's say you went and bought 2 stocks on January 1st. One of them is up $10,000 in value, and the other one is down $10,000 in value. Well, ordinarily, if you were to go and sell that first stock for a $10,000 profit, you would have to pay tax on those gains of anywhere from 10 to 50% depending on your tax bracket. But according to the IRS, you could offset that tax by selling another stock at a loss. And if you structure that correctly, that loss could entirely wipe out the tax you would have to pay on the gain. Then, in addition to that, if your capital losses exceed your capital gain, meaning you've lost more money than you made, Wall Street bets, then that remaining amount could be deducted from your earned income up to $3,000 a year, and then any amount above that could be carried forward into future years. Now, when you apply this overall practice to cryptocurrency, like in my example, it starts getting really interesting. Now, typically with stocks, you have to comply with what's known as a wash sale, which means you can't just go and sell off a stock to offset a tax, and then immediately go back in to buy that exact same stock within a 30-day window. The IRS does not allow that, because otherwise everybody would be selling off their losing stocks and then immediately buying back in without paying any tax, so you can't do that. However, with cryptocurrency, they've said that technically it's not a security, it's a property. And therefore, people argue that the wash sale rules don't apply here, which would allow you to sell something and immediately buy it back without worrying about that 30-day window. The other advantage when doing this is that the IRS says that you could identify which specific tax lots you want to sell, and then only claim those losses against your other profits. In this case, I have a chunk of recently purchased Bitcoin, all of which would be subject to short-term capital gains tax at my highest possible tax bracket that I could sell now, use that to offset other short-term capital gains. And then I'm able to rebalance my entire cryptocurrency portfolio. I could buy a little bit more Ethereum, and eventually I could buy back more into Bitcoin. Now, of course, there are a few things that you really got to watch out for when doing this, because if you make a mistake, it could potentially cost you a lot of money.
So I am personally not interested in knowing about the US taxation, but if he has sold the Bitcoin and other cryptocurrencies to reduce his taxes legally according to US law, that is a smart move. He also covered the way cryptocurrencies are taxed in USA and gave his opinion about it, but I am not interested in that since I don't live in the USA, so I will skip that part of his video. But now comes the interesting part, meaning the way he diversifies his crypto portfolio. So let's see what he said about his crypto portfolio allocation, and then I will give you my own opinion on it, and that is going to be very cool because I will tell you how I create my crypto portfolio.
But from here on out, I'll continue to add on to my Ethereum position as planned. I had a really good opportunity to buy into Bitcoin during the dip when it dropped below 34,000, and I'm still on track to get 5% of my entire net worth in cryptocurrency by the end of the year. My goal is to keep an allocation of 40% Ethereum and 60% Bitcoin, and if one of those grows faster than the other, like Ethereum has done, I'm not going to worry about it. My plan is to keep buying in at regular intervals.
So I personally think that investing in just two cryptocurrencies is not wise. Looking at the volatility of the crypto market, I will rather diversify by allocating my funds equally to 4 groups. So 25% will be allocated to BTC and Ethereum since they have survived many bear markets, and of course Ethereum is going to play an important role in the DeFi sector. The second 25% of the funds will be allocated purely to new platforms like Solana, Polkadot, and Redix. So just to inform you, Redix is not a blockchain but a distributed ledger technology or DLT, which can perform very well in several use cases where scalability requirements are very high. The next 25% of my funds will go to exchange coins like Binance BNB Coin, since its blockchain is instantiating many new DeFi services. And the last remaining 25% of my funds will be allocated to good projects in the DeFi sector, NFT space, and other market segments where I can see good potential. And this last batch surely carries huge risk and huge reward. And at the same time, I will constantly look at the Google Trends, and as I make profits, I will accumulate them in the form of stable coins to buy back the dips as long as the bull market lasts. I am not a big fan of shorting Bitcoin and leverage trading, and this is a personal preference. Let me know in the comments below, do you agree with my viewpoints on the cryptocurrency market? For those of you who are new to this channel, I am Dr. Subayal Khan, and my goal on this channel is to help you in making your money work harder, smarter, and in long term. Thank you for your time and for watching and appreciating my content. Also, I will really appreciate if you leave a comment on the video and like the video to bless the YouTube algorithm. I will be grateful for your support. Also, I have mentioned a link to Blockify in the description, which will give you up to $250 in free Bitcoin. It will also give you 9% interest on stable coins, which is way higher than the 0.5 or 1% interest which you will get when you put your money in a saving account with a bank. Have a nice day, and I will see you in the next video.